how can the stock market not crash when it looks like World War III out there? After a brutal and just ugly morning, the averages came roaring back. Dow finishing up 92 points, S&P jumping 1.5%, NASDAQ pole vaulting 3.34%. It was a stunning reversal from a market that was down gigantically at the opening. It caused many to question how it was possible, with Ukraine in flames from just horrendous Russian aggression, that anyone would want to buy, not sell stocks. Sadly, it's easy in retrospect to see why, because we've had ages to figure out that Russia would invade Ukraine. Our government has been warning us about this, I don't know, on a daily basis for many weeks. It's one of the reasons why we sold off so hard in the last few weeks. There's no surprise here, except we still can't be sure how the war's going. Maybe the market rallied because Wall Street's betting on a quick capitulation by the Ukrainian government. It's hard to imagine how they can win without more support from the West. I don't think they're going to get it. The buyers don't seem to be putting too much weight on President Biden's sanctions either. Sure, back in 1997, when Russia had a currency crisis and a serious debt problem, you could knock that country over with a feather. Now, though, Russia's solvent and oil-rich. Even if their stock market took a hit today, and not a lot of people involved in their stock market, as dangerous as Putin is, he's not dumb enough to go to war empty-handed. That's terrible for Ukraine and Ukrainian people. But Wall Street doesn't care about the outcome as much as it wants the current crisis to be over as soon as possible. Of course, the buyers could be wrong. If our government decides to do a rapid supply of millions of, I'd say, munitions that can fight mechanized troops, well, that's not factored in. Massive partisan resistance, not factored in. A Russian army that's weaker than we expected, not factored in. But at the moment, buyers are betting that all of those are long shots. The next level of seeming danger that we seem to just, I don't know, whistle past, how about that? Recession. Yes, we have to worry about a recession. That's because if the Fed is going to kill inflation now, or can, the only thing it can do is raise interest rates aggressively, which will crush the economy. Again, though, if that's really the case, you'd expect to see the typical recession-proof stocks roaring here, the consumer staples and the drugs, yet many of them actually went lower. They were the worst group today. What's going higher? The home builders. The home builders of all groups, along with the NASDAQ stocks that have been crushed again. Okay, it's all counterintuitive, but when you consider that because of a flight to quality, long-term interest rates dropped right after mortgage applications had fallen dramatically, I can see why someone would want to buy Lennar or Toll, especially if the Fed decides to tighten less aggressively, just in case the Ukraine situation causes a slowdown. Meanwhile, that same decline in long rates caused the banks to get clocked. I think it's a total overreaction. Bought some for the Charitable Trust. So I think some of the concerns about the banks being hit by retaliatory cyber attacks, while they can't be overlooked, may be an overreaction too. As for the NASDAQ stocks, I'm betting that's just a short covering rally, with the exception of the cybersecurity stocks that should make out like bandits as Russia creates endless demand for their products. More on that later when we hear from CrowdStrike.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.